After nearly 2 years of interest rate hikes, relief could soon be ahead for borrowers.
Fed will not hike interest rates further, and for all intents and purposes, this ends the Federal Reserve's rate hike campaign.
The Fed is expected to pause interest rate hikes following its final meeting of 2023 this week. And there's growing speculation that the Fed is close to cutting interest rates, ending its aggressive campaign to lower the overheated economy and tame historic inflation.
The Federal Reserve also needs to understand that we cannot continue to create a social divide of winners and losers with this division widening further and further because it could lead to societal instability.
Despite Fed Chair Jerome Powell leaving the door open for future rate hikes, several recent reports are showing inflation is slowing and the economy is cooling. Citing that data, some market traders, investors, and economists expect the Fed to cut its key interest rate at some point within the next few months.
We don't expect the first rate cut until June of 2024, and we expect 100 basis points of total rate cuts through the year.
The Fed's funds rate heavily influences borrowing costs for things like credit cards, mortgages, car loans, and personal loans. And economists say interest rates could begin to come down even before the very first rate cut.
They already are, as market participants, investors, and other policymakers begin to set expectations about where interest rates will be in the new year and then move throughout 2024.
For Consumer Watch, I'm Jen Sullivan.
Now, something to watch out for today. The government is set to release its November report on consumer inflation.
Yeah, that'll give us an idea of whether inflation is still cooling off, so we'll know more later today.